All right, hello and welcome to Stock Market Mutterings Daily Trade Review and Recap for the last day of October the 31st. And no matter where you ended up, if you lost a lot of money, because I'll tell you what, it was a wild market, that's for sure. If you lost money this month, if it was a just exhausting, physically, mentally draining month, or you made a little bit of money, this is for you, man. This is for you. Because if you're going to get up tomorrow and you're going to do this whole thing all over again, right? You're still standing. And no matter how you finished up, if you're still standing, tomorrow's another day, man. Tomorrow is another day. So I congratulate you for making it through yet another month of stock market trading. Now for us, this was my second best month. My second best month of the year. Pretty wild. Not without some issues for sure. Because I will be on the side saying, even though it was a great financial month, it was exhausting. These back and forth ranges, this wild volatility in this market was an adjustment. You're going from a docile market or a very calm market, and all of a sudden, snap of the finger, you're thrust into something else. And that's trading. We've got to be able to adapt to that and adapt to it quick. So if you need help with your trading, visit thelincolnlist.com, click on the Trade Room tab, trade November with us. It should be very interesting and exciting and hopefully profitable for you. So I'll start out with the trades this time, and we'll talk about the market because we did see a pretty good rip. So we're starting to reach some different levels that we want to take a look at as we begin the month, and we'll go into that. So first of all, I was still sticking with the plan of shorting into strength, and I thought today, let me try to buy maybe, possibly, if there was weakness, to see, my first order of business, like I left it off yesterday, was to see as to whether or not we were going to be able to continue this rally. Now, one of the things that you have to understand, if this is the first time you're watching it, I think I actually covered this in yesterday's mutterings, is that when the market is flushing, the majority, the herd, when I say they, I'm going to refer to that as the herd mentality of traders and investors. The first sight of green, everybody piles in because they're trying to bottom ticket and they think, oh, this is the green. So let me pull up the SPY chart for everyone real quick. Where is it? There it is. So we've had that before. So back on the 15th, 16th, whatever day this is right here, everybody's like, this is the bottom. This is where the market rallies back to highs like we saw through Brexit, elections, and the other hundreds of what we thought were corrections before. But then it rotates lower. And then you had this green bar right down here on the 23rd. Okay, this is the bottom. And then people keep trying to fish out for that bottom. So every single one of these green bars is going to lead the herd to naturally think, look, this is going to be the bottom of the market. And so far, they've been wrong. The BTFD crowd has been wrong on this trade. Been right for many years, but wrong right now. So it's normal that when you have that big run day like we did yesterday, that you're either going to get a gap up or you're going to get morning momentum. This is why a lot of traders look at strong stocks or stocks that close strong, because those are the highest potential for stocks to be either gap ups in their charts, or they will run early in the morning because people want to get in. FOMO, that's what they want to do. So my thought was, to stay with that plan. And today what we woke up to was yet again another little gap up. Looked like this market really wanted to continue. And I saw a lot of early gaps in some of these names that I'm very familiar with trading, and most notably was Grub. Now, it's one thing when a stock reports earnings and it goes vertical, because earnings is always your wild card, because to me, when something goes through earning, technical analysis kind of takes a back seat. But all the rest of that stuff does not, and if it's just a fly off the handle, no news related spike. So what we had here today was a stock that's obviously been beaten up like 1,000 other stocks that you're going to see, and it just shoots straight up. And I think you're going gapping up post-market, gapping up pre-market, and then just shooting from $96. I mean, you got to understand this stock was just like $82 to $83 yesterday. And then people are stuffing themselves into it. So remember, when we talk about common sense being the very best trading indicator that you will have as a trader, overrides technical analysis. This is what I'm talking about. It's not a matter as to whether or not Grub is a good company, or whether or not Grub makes money, or they're going to trade back to 140. It's just for this moment in time, you're taking a very fragile market, and you're running up a stock that was dead in the water yesterday, down around the low 80s, And nobody wants it, right? Again, this is how people think about investing in trade. This is why the herd loses money, is because they're not buying yesterday or the day before when there's panic and fear in the streets. They're chasing stuff now after they see a few green bars. And that's what this case turned out to be. So first, we just get in here, and it was just a dynamite entry. I mean, it was one of those trades you just get into, and down it goes. You don't even have to hassle with it. Now, I kind of thought, which I've been doing here over the last couple of weeks, was that I still wanted to stick with the plan of taking partials. I'm like, let me take a partial just in case this thing sells off and gets sauced and goes red. I mean, we got $5-6 of room here before it even goes red. This could be a big trade. Well, it actually sneaks back around. Now, at this point, the market's really on fire. So I'm like, I don't know if I want to add back to this position. Maybe if I see some weakness, I'll take what I've already profited and I'll put it back on top of it. Well, it rolls over anyway. So it turned out to be a really, really nice winner. But, you know, when I look back at it, I can definitely find the flaws in this trade. I mean, when you're looking at charts, sometimes hindsight's 20/20 on them. But there's no doubt I could have added back in, at least on this red bar up around 96 and got a much better average. That would have been a huge winner for the day if that would have been. But a win's a win, right? I'm not going to complain about it. So that one was good. I did the same exact thing with OLED, but OLED became ultra stubborn. Now, this is just my trading style, and I know there's going to be a bunch of traders that don't necessarily agree with me, and so be it. You have every right to each his own. I've always talked about my shorting, and when I do these vert shorts, I always start very, very small because I expect that I'm not going to be able to be good enough to top ticket. I'm going to have to work the trade, which I'm okay with, and I've grown accustomed to that. This one was stingy. I added 2 more times to this and really caught. I mean, by the time this thing rolled over, it was just with the size that I had into this trade and everything else, this was just big. This was a big, big winner. But I made a mistake. I made a mistake because I cut half. You'll see on the sheet. I cut half of this when I got just a little bit of profit on it. And I let the other one go, and I just let it snap back on me, taking away all of that $2 a share profit, which was dumb. I mean, that's just dumb. Now, I know a lot of other people that trade they'll hide their failures, their weaknesses, the things that they do wrong. I tell you because we all make mistakes, man, and I made a mistake. I don't have an excuse to say, well, this or well, that. I mean, I had $2 on the table and didn't take it. Now, maybe my mind was still thinking along the lines of Grub that maybe we go red, maybe this turns out to be a really monstrous trade, and that's okay to think that way. There's nothing wrong with that. But there were signs as it starts to grind up after about 15 to 20 minutes when it's like, okay, well, maybe it's not going to work. And you have to take the money. You just have to take the gain because you're probably not going to get that next move. That's what I want you to take away from that, because you're going to have a lot of trades like this where you had money on the table and you gave it back. And to me, that's one of the worst things for you because you did everything else right. You got the entry point right. The execution was right, but you screwed up on the management. You had the winner right there in your hand and you blew it, right? And maybe something like this turns around and goes against you, and what was a good winner turns out to be a miserable loss. It's unexcusable. It's okay if it ever happens every once in a while, but still, that was nasty. I just didn't like that. That kind of agitates me. So that was no fun. Then I put in a little bit of a Netflix short as things started to roll over here a second time, which was a pretty good play. I mean, obviously could have got a little bit more out of it, but it's Netflix. I never know if one candle is going to go up $5 or down $5. But it was a really nice chart, failed bounce. Things were starting to weaken a little bit, so that one was pretty good. That means only 3 losing days the entire month. And like I said, second best day. I've had a really nice month. So I have to be happy overall with the way that I traded. I'll say it. I'll give myself a B because there was a lot of things I could have done here to clean up some slop. There was a couple of loose ends there I could have done better throughout the month that maybe not would have made me much more money, but would have definitely saved me mental anguish. Let's use mental anguish. Yes, let's go with that word. So that was my month. Again, if you need help, you know where I'm at. Let's talk about tomorrow because that's what matters, right? We're only as good as our last trade. So what do we got here? If we look at the market, you did get this second day follow through. We'll pull up the SPY here. And one thing to take note, I mean, this thing was just, everybody was in a buying frenzy this morning. Understandable. Again, people are trying to fish out the bottom for this. But there late in the day, man, it was like, showed you the level of confidence that traders and investors really had, because everybody was riding high, and it's like, okay, look, we got about 30 minutes to go. Let's get the hell out of these things. And the market just, I mean, just drops. It's $2 here on the SPY, which is significant. On the Dow here, you have roughly, what is it, 25 250s, was it? Yeah, about 200 points. 200 points in the last 30 minutes to 40 minutes of the day. So it was like everybody was like, no way am I holding overnight. That's the way I gather what we were seeing. So when we look at these levels, I think maybe you've got a couple of interesting levels here. First being, if we continue to see strength, and strength means not just one or two green bars, but that means that the rallies are able to hold, kind of like they did intraday. You're still getting a lot of pullback. Like here, example for the SPY, you get a lot of ramp up in the morning, and then, you know, right after the first hour, there's this deep correction that sometimes challenges lows of days. It really starts to pull back, and I think this has shaken a lot of traders out right here, because they're getting taken out of their positions here. They're thinking the market's going to collapse, and then it doesn't, and then they're all buying it back a little bit later on. That's just my theory. Call it crazy if you like. But if we can stay strong and you start seeing back up through 273, we've got to start taking a look at this 200-day moving average, which is roughly about 276 and some change here. You've got to look at that as an upper area of resistance, at least for the short term. And when you're looking at these rallies, you really cannot trust them. Yeah, you got to understand there's a hell of a lot of technical damage that was done in this market. And it's under the 200 moving average, which I don't think the market's been there for a really, really long time. I can't recall it off at the top of my head, but it's been a while. It's been a while. So this is something that's not just going to be, I think, like the last rallies where it's just one day and then you're back up to highs. There's a little bit more damage here. There's a little bit more fear in this market. The volatility is a little too high for that. And even in bear markets and recessionary times, you're going to get rallies. I mean, I can remember that when, you know, market dropped several thousands of points through the credit crisis and stuff like that, it would snap back 700 or 800 in a single day. It just doesn't go straight down, just as it doesn't go straight up. So keep that in mind. If you start going back into the 266s, you take out yesterday's lows, not today's lows, but you start taking out yesterday's lows, midday supports from yesterday in that area, probably around the 266s, you start getting weak like that, then I would expect that what I said earlier, that we may see February to April lows, I would think that's probably where you're going to go. You know, if this is going to be the bottom, it's going to take probably a little bit of time. If we get stronger, look for that 200-day moving average up there, 276. And if you start eating into yesterday's levels into the SPY, let me give you some numbers rather than just tell you. And if you start getting into this little area right here, 263s, you know, where you're unable to hold the 266s, then possibly that's something that's back on the table there. We're all going to find out as the month starts, because at the end of the month after this, it's not unlikely to get a rally. There maybe last 1, 2, 3 days. It's also the end of the month. It's not unlikely to see institutional buying at that time. It's all going to have to work its way out in the wash. And as I said, far be it from me to try to predict it. You just do what you want, market, and I'll react accordingly. So there's a lot of good stuff here that has potential. You know, like you've got BA back above its 200-day moving average. You got this upgrade on NVDA, which has been just in the hellhole, just finally touching its 10 moving average, but it's got a long, long way to go. So there's some good looking stuff here, but I think after 2 days of this, it's hard to make the case when you're saying, look, why should I buy NVIDIA now at 212, for example, when 2 days ago it was 177? I mean, look how much premium I'm giving up in between that. And what if it wants to go back to 177? Is this the best opportunity? Is this the best time to make this decision? Now, maybe it goes up, but as a trader, you have to ask yourself that, and just in almost every trade you take, actually not almost, all the trades that you take, is this the best opportunity for me right now? You know, is this the best usages of my money? You have to make that determination. So that's what we do. Anyway, guys, let's leave it at that. How about it? It was a great month. Second best month. I've already said that. Boast a little, I know. But hey, what am I going to do? If you need help, you know where I'm at. Visit thelincolnlist.com. Click on the Trade Room tab. And just remember, I know a lot of you are going through this for the first time. This market is wild. And no matter how many times I go through it, it's exhausting for me too. You know, I remember bear markets, but you know, I go a long time in bull markets and stuff like that. I get complacent too. I get used to doing things and doing things a certain way, and then all of a sudden you're thrust into this. And that's sort of one of the things that, you know, I'll spend one minute or so on this topic. But this is some of the stuff that we kind of struggle with as traders, is that it's the emotional part is because you're just thrust into stuff. So if you think just on a normal day with not much volatility, or just your regular trading session, what you're trying to get yourself used to is that you're sitting around a lot. People think from the outside that you just trade 24/7, but how many times do you actually enter a trade? I mean, you probably spend 85% of your time looking and thinking and searching for ideas. And then you probably spend the rest of the time staring at the computer, waiting for that to manifest. And you probably spend only 1 to 2% of your actual time in your business of trading. Now, I've never done a study on this to figure out how much, you know, time I'm in it. But like I said, my average trade is like 10 to 16 minutes in duration. So what does that tell you? You're not in the trades that long in a lot of cases. And you're sitting around and you're waiting a lot. So your emotions get calm as you're waiting. And all of a sudden that opportunity comes in, and that sort of fight or flight response, so those emotional triggers, that excitement, that anxiety, nervousness, whatever you want to call it. It's just like right there you are, and then you're just thrust into action. And then it's like, okay, that trade's over, and then you calm back down, and then you're thrown back into action. You got to kind of get used to that. In a market like this, you're seeing that 10 times more, because it's like I said here before, you're NVDA, you're like, I'm at 212. I'm down to 204. I'm back up to 211. I'm back down to 205. You know, you follow what I'm saying. It's like this thing just wants to whack around $10. And it's like, that will wear you out. Even if you get on the right side of that, timing that, waiting for that, looking at that, it's exhausting. It is exhausting, because now when you're in the position, you can't afford to be relaxed around your position, because it's like if you're long and it starts pulling back, you're like, I probably should get out of it, because maybe it just wants to go backwards $25. Who in the hell knows? You know, same way with you're in a short, it starts going down. It's like, well, maybe I should start trailing a cover, because maybe everybody wants to get bullish all of a sudden and the market wants to ramp. So little education there for you at the end. Again, I'll leave it at that. As always, if you need help, you know where I'm at. Thanks for watching these videos. It's been a month since I've been doing these daily recaps. I hope you like it. If you have hints, tips, or suggestions, send me an email, support@thelincolnlist.com. Trade well, guys. I'll talk to everyone tomorrow. Have a good month.